Hey everybody, Josh Sigurdson, World Alternative Media here, and I'm here in Las Vegas, Nevada, where it's hovering around 110 Fahrenheit. It's extremely hot, and something else that shows no signs of cooling down in the near future. Well, it's a global markets and the global monetary system, and I don't mean that in a good way. I mean, this house is on fire, and there's no way to save it except for, sprinkle water and make it take longer to burn down. But I mean, in the meantime, we are watching what appears to be a huge bloodbath with markets, especially looking at the global monetary system. Australia pushing to lower rates. Britain is looking to lower rates. The Federal Reserve is talking about lowering rates. And rates are at an insane low, the likes of which we haven't seen. I don't know what the last time we saw anything like this was, but we have to also remember, on a global scale, everything coming to fruition at the same time, it's not a good thing. We're looking at Deutsche Bank. We're looking at many other banks going into bankruptcy, laying off employees. We're looking at, for example, the cash to deposit ratio at a lot of these banks. Most of the big banks are dramatically low, and it's technical insolvency that we're seeing. And we're looking at this today on the bond market, and this is just absolutely crazy. As this Zero Hedge article says, stocks slump into red after disastrous 30-year bond auction. And as it goes into the following the disastrous massive tail in the 30-year Treasury bond auction, yields have exploded higher. But instead of reflexively rallying on the bond losses, stocks are sliding as we suspect risk parity strategies are forced to rebalance in a hurry. Yields surged, and you can see that chart right there, the 30-year. But stocks tumbled, and you look at this, and this looks far too familiar at this point. S&P tested and failed at 3,000 for the fourth time. And as bond yields and stocks recouple, this is the biggest 5-day rate shock since Trump's election. And as you can see, it's nothing short of crazy. As this article says, disastrous bond auction sparks rate rout sell-off in stocks. Bond bulls just had a cliffhanger moment, and a really cheesy clip from Cliffhanger in 1993. That's great. Payrolls, Powell, and the panic at the auction have sparked the biggest bond bloodbath since Trump was elected in November 2016. So it's hitting the news all over the place. This is rather large, and we've gone into a lot of this stuff before. I just want to let you guys see these charts here, and you see this tweet from Donald Trump, and President Trump loved it. Dow just hit 27,000 for the first time ever. Yeah, but do you know why that's happening, Trump? Do you know why we're seeing such a propped up system? It's all just floating on debt. There's nothing else holding it up. I mean, speculation, sure. Fundamental value, certainly not. Chinese stocks have gone nowhere since Monday's dump, as it shows here. European markets continue to diverge dramatically, with Germany slammed and Italy bid, banks and the yield curve. Treasury yields exploded higher on the day, with the long end dramatically underperforming. The yield curve, 3-month, 10-year, remains inverted. The dollar ended marginally lower after scrambling up to unch after a week overnight session. Cryptos were down modestly on the day, with Bitcoin the only major that remains green on the week. Going on here, it says, investors are preparing for a global recession. So people are starting to really take note of this. Obviously, you cannot prop up a system too long. I mean, it's already been too long, but you can't prop it up too long until people finally realize, wait a second, why are we buying this? Why do we have faith in the system? I mean, what are we actually getting that's different or, innovative or properly competitive even? I mean, really not that much. Well, as this article goes into, an influential survey of some of the world's largest fund managers shows that the risk for a global financial downturn is the highest it has been in 4 years. Investors are now preparing themselves for the next recession, which some say will make the Great Recession look like a cakewalk. Yeah, well, of course, as it goes into, according to investors surveyed by Absolute Strategy Research, as reported by the Financial Times, investors are buckling up for the economic downturn they believe is imminent. ASR's findings, which are based on a survey of more than 200 institutions controlling a combined $4 trillion of assets, suggest that the bond rally is not a blip. Global bond markets have rallied in recent weeks as central banks have been responding to the numerous signs that major economies are looking increasingly weak. Investors have since ramped up purchases of government debt last week after Christine Lagarde's nomination as the next European Central Bank president. Oh my God. It appears that investors are betting that the International Monetary Fund's chief's appointment would mean the era of ECB stimulus is set to continue. The survey indicates that investors anticipate a 45% chance of global recession in the coming 12 months, the highest since the survey began in 2014. Investors have also shifted their views on where bond markets are headed next. The majority now expect short-term U.S. bond yields to be lower in a year's time, a reversal since March when more than half were banking on higher yields. Expectations that longer-dated yields and record low yields in Europe will rebound have all but disappeared, according to the Financial Times. According to David Bowers, the ASR head of research, the United States indices are yet to show some of the telltale signs of doom and gloom. And I quote, "If the bond market is really telling us something, at what point will the equity market wake up?" he said. The survey embodies a fundamental tension in markets, he added. With recession risks running so high, you would expect a worse outlook for earnings. But the implicit assumption is that earnings risk for equities are not that great. Fund managers are also more bearish on the dollar than at any point in the past 5 years. The survey showed, according to the Financial Times report, a weaker United States dollar would be excellent news for precious metals, with nearly 2/3 of investors expecting gold prices to rise in the next year. That makes now a great time to invest in gold or other precious metals. Take the time to look around and get what you can afford, as this article says or suggests. Now isn't the time to go into debt to buy gold, but there are some less expensive options out there. You could also grab some silver. Some silver is better than none if the dollar crashes under the weight of endless money printing and government debt. And we have to also note here, if you look at the gold-silver ratio, it says a lot. It always peaks, and it's peaking higher than ever that I can remember on a recession indicator. I mean, you see gold and silver rise up as recessions happen. We've seen that throughout history. A lot of people think that that's a controversial viewpoint, but I think that the history, the charts speak very, very loudly about that. I want to also bring up these government bonds. This is currently the 10-year bond in the United States, and here is the 3-month. It says a lot about what we're witnessing in the last few years anyway. It's absolutely crazy. And then, of course, I should add that there's been a lot of talk about devaluing the U.S. dollar, which Trump is completely on board with, by the way, folks. Here is an article. Trump says U.S. should join great currency manipulation game by devaluing dollar, and this is from July 4th. And he said China and Europe playing big currency manipulation game and pumping money into their system in order to compete with USA. We should match or continue being the dummies who sit back and politely watch as other countries continue to play their games as they have for many years. And come on, guys, this is so ridiculous. So, yeah, Trump is critical of the Federal Reserve, but in all the wrong ways. So, interest rates were pushed up or propped up as much as they possibly could, but still very low, and we're entering into a crisis, which is really bad news because we're looking at negative interest rates now. And obviously, they're talking about lowering interest rates now. Australia lowered them to 1.5 and then 1%, which is crazy. And then Italy entered into a recession. Britain, the UK economy, Bank of England talking about lowering rates, and Canada as well. And I feel like this is a perfect storm. And people are like, oh, well, the stock market is rallying. It's doing so well. Everything's great. And meanwhile, no, it's all manipulation. It's all fake. It's all propped up on nothing. And Donald Trump's friend himself, to us, Robert Kiyosaki, told us that he believes this is all fake. He wrote a book called Fake. You should check out that interview we did with him recently. But again, people talk, well, Trump is critical of the economy and Stephen Moore is critical of the Federal Reserve and all that kind of stuff. And meanwhile, they're like, well, the Federal Reserve should manipulate it in this way rather than that way, which all ends with the same results eventually anyway. All fiat currencies eventually revert to their true value of zero, always have, always will, going back to 1024 AD in China, and this time isn't any different. So we could keep begging government and keep begging central banks to do this over and over again, but what does this lead to? More debt, more destruction, more sewage that we're all floating in, and we all think that it's, raining and rainbows and sunny days and all is good, but we're getting pissed on, and essentially we are being fooled into actually believing that this is a good market, good monetary system, as well as with jobs, for example. I keep hearing the job numbers are great. Labor force participation rate, guys, look into it. The job numbers are hidden after a certain amount of time of looking for a job. You're no longer considered unemployed, even if you are. So look at the labor force participation rate. Also look at shadow stats and to look into the true inflation rate, which is around 11 to 11.5% today, based on the 1980 standards through the Fed. And that tells us, okay, so we just keep printing. We devalue. Price of living increases. Oh, well, we need the government to come in and, pull wages up. Raise the minimum wage. Then businesses can't afford to compete, and big businesses, big gigantic monopolies, will continue to grow in size and stature with limited to little to no competition. And people will go, oh, look at these big monopolies. We need to regulate more. And then they'll regulate, and what does that lead to? Oh, well, monopolies can handle the regulations that small businesses can't, and people can't compete, and also it hurts employment and all that kind of stuff, and the price of living, of course. So it just keeps perpetuating, and people keep asking for more of the same things that caused it in the first place. And it's really frustrating for me because I've been talking about this since 2006, about somewhere around there. And it just keeps going on, and people ask for the same things over and over again. And I have to say, it's because people aren't educated at all on money. They don't understand money. They keep perpetuating these problems because they think they work, because they think certainly the government, certainly the banking system has our best interests in mind. No, they have debt in mind. They have dependency in mind. If you shove someone down a bottomless pit of debt, they're forced to ask for a ladder up from the government and the banking system, pushing them into perfect servitude. To them, right where they want you. They want you in servitude. And this is a great way to do it. Make you desperate, need money to afford to live. And then you beg for more and more perpetually forever. And this has gone on for hundreds, 1,000 years. And the only thing that's changed is it's gotten worse and gotten more coercive because it's gotten more digital and more, you can't run on banks anymore. People are less educated now on money than they used to be because back in the day, they didn't distract you with so many bread and circuses. So, I mean, at the same time as we're seeing the bond market take a hit, and we will see a huge crash there, I can't even believe it's been propped up as long as it has, but we'll also see, interest rates go down, likely into, without a doubt into negative, at the rate from 2008 to 2012, about 5.5% dip in interest rates in the United States at that rate, plus what we're going to be dealing with a far greater collision that we're on the road to. Likely, as John Snyson, our economic analyst here at WAM, says on multiple occasions, it's like 2.5 to negative 2.5 to negative 3% interest rates, which is crazy. And then they go into the cashless society, run through the banking system and legal tender laws, and no escape from that. So more dependency. Then you have the housing markets. Then you have the banking system, which is bankrupt. And you have all these countries around the world, the poverty rates rising, division and conflict within these countries rising. And then I still see people going on and on about what happened on The Bachelor recently, the show. It's like, really? All this stuff is happening? We're on this collision course. It's the most important time, I believe, in history. And you care about what some guy on a script said on The Bachelor? Sorry, guys. Have to trash it. It's ridiculous. Totally ridiculous. But nonetheless, we're in a very important time, and it's more important than ever to understand money. So if you understand money, you control your money. If you don't control your money, someone else controls your money. And the people that control your money are the people that are printing the money. And the people that are printing the money want you in servitude to them and the state. So it's a no-brainer. You need to understand money. So again, Trump says, well, the stock market's doing great. See where that goes. I can't believe they had any energy left in them to pump up that system. But the more they pump it up, the more it comes crashing down. And it's just sad. The sooner it happens, the better. As Stephen Kendall recently told us here at WHAM, we're in a ghost crash. Hashtag ghost crash already. It's just propped up on debt. It's all fake. It's artificial. It's manipulated. It's nothing. It's all propped up. We recently saw with the Fed talking about lowering interest rates that gold and, of course, cryptocurrency skyrocketed on that. Bitcoin is highly volatile right now. Risky, but I like it, in my opinion. Gold is, of course, historic wealth insurance, and there's more solutions than there are problems. But the problem is most people don't understand the problem, so they perpetuate the same problems over and over again, as I mentioned earlier. So I think I'll leave it at that. We will continue to cover this as it gets crazier and crazier. China is getting over China is looking at replacing the U.S. empire in the next several years. So that's definitely worth looking into. That's going to be huge news when that comes to fruition again. India is looking at going in the same direction, beating out the United States. And this shouldn't be about countries beating countries, because then it's governments fighting governments while the people suffer on the streets of all these countries. Tariffs, taxes, regulations, all the kind of stuff that props up a fake, faulty, debt-based system, and then eventually, inevitably, crashes it downward. It's a sad reality. We need to understand it. So protect yourself, protect your wealth, be financially responsible and stable. It's up to you, no one else, and you will be good. You'll be fine, but you have to understand these things and be prepared in every way possible. Food, water, shelter, self-defense. You're not gathering things for the toughest guy on the block. And like I said, gold and silver, in my opinion, as wealth insurance, not investment advice, just wealth insurance. And of course, cryptocurrencies as well that are properly decentralized, fundamentally useful, not controlled, obviously, and obviously not these legal tender laws arguments that I keep hearing, like, oh, well, it's a mark of the beast and it'll be controlled by the government. Yeah, well, if it was on by legal tender laws and enforced usury and debt that's on a contract that you never signed and then extorted from you, yeah, sure. China, Libra with Facebook, all that crap. But otherwise, it's just a competing currency. And value is subjective based on the two individuals that trade it back and forth. And if you say Bitcoin has no value, then I guess you don't want 10,000 Bitcoin. Let's see, 10,000 times 11,500. You do the math. You know what I mean? Like it says a lot about people that say it's not valuable, but then obviously they take it, so it's valuable. It's valuable to you. Even fiat is valuable when you are exchanging it. It's dependent on both people making the transaction. It's just that it's coercive. That's what makes it bad. And stupidly printed like out of nowhere, just nonstop with no cap on creation and no real use case other than as the U.S. world reserve currency. But again, enforced by usury contracts that you never sign that enforces the debt on you through this communist banking system, which goes right back to the planks of communism and complete centralization of society. That's criminal. That's completely criminal, and that's the difference. So anyway, remember, fiat means by fiat, by law, by force. Don't forget that definition, because I hear it way too much when people are talking about Bitcoin. Bitcoin isn't fiat because it's not enforced by law and legal tender. Anyway, we all have a lot to learn. We could all stand to learn a little bit, and this video has gone on too long. So I'll talk to you guys later. If you haven't noticed, I'm very tired and very out of it because of course, it's 110, hovering around 110 or more degrees Fahrenheit, over 40 degrees Celsius in Las Vegas, and you go outside for 10 seconds and it kills you. So I'm going to do my best to get some more reports to you soon, but it takes a toll on my brain and hard to think straight. It feels like you've been up for like 3 days awake. It's a terrible feeling. So I'll get back to you guys with much more. Make sure to check the links below for Anarcha Vegas 2019, anarchavegas.com, ANARCHOVEGAS.com. Use promo code WHAM and save 10% on your tickets. It's going to be a great conference. I can't wait to see all of you out there. G. Edward Griffin, Jeff Berwick, Bo the Fifth Column, obviously. Great people are going to be out there. Lynn Albrecht, Sterling Lujan, David Rodriguez, Benny Wills, Kerry Wedler, Ford Fisher, Luke Radowski, Dan Dix, myself, so many more. John Snyson here at WHAM is going to be there. Don't miss it. I'm looking forward to it. Many more speakers. Check out that website and get your tickets while you still can. Discounted greatly, 10%, with promo code WAM. And check out our Subscribe Star below. That helps keep us medias alive as we're being heavily shadow banned, as well as GoFundMe, Patreon, and Bitcoin. And we have Dash and Digibyte listed on our Steemit at Josh Sigurdson on Steemit.com. So make sure to check all that out. And anyway, and we are on BitChute, by the way, BITCHUTE at World Alternative Media. So anyway, there's so much happening right now, and it's getting heated up. Like I said, like outside in Vegas, it's getting even more heated up in the market, and again, in not a good way. So be prepared. Until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change. Like what you see here at WHAM? Don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we're so heavily demonetized and censored and shadow banned. It's getting really bad, folks. If everyone just gave $1 single a month to, say, Patreon or our Subscribe Star, where we do subscriber-only content, we could really get out of this rut that we are currently in as YouTube tries to stifle independent media and prop up the mainstream media. This is really important. This is one of the most important times in independent media history for us to say it's now or never. Let's keep moving forward and let's be that change that we wish to see in the world. Of course, there's also our Bitcoin address below as well as on the screen for you to scan if you please. And of course, we got events coming up. So make sure to check us out at anarchavegas.com. Anarchavegas.com. Use promo code WAM, that's WHAM, for a 10% discount on your tickets. It's on July 19th, 20th, and 21st in, of course, Las Vegas, Nevada. That's anarchavegas.com. Make sure to check us out there and find us on websites like BitTube and Minds, and just try to support independent media, if not myself, any of the other big independent medias out there, to help us continuously bring our message to you free of charge so that we can really change the guard as we move forward into a dramatically polarized, crazy future. Let's try to make it as sustainable as possible. It comes down to you guys. You are the change you wish to see. You guys will help us get through these tough times. So anyway, check out all those links. And until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
I'm sure you have already changed people's minds in your young age because you're involved, and I like that.